So 2022 is a pretty action-packed year for us with production coming back online, a significant amount of cash flow that will strengthen the balance sheet, construction continuing on phase two, the refinancing or increasing of the debt piece for phase two, and then any exploration success and sizzle from both properties.
Hello and welcome viewers tuning into Assay TV. Today we're featuring an update from Steppe Gold, Mongolia's premier precious metals company. And I'm very pleased to be catching up with Aneel Wairach, who is the Executive Vice President and Director of Steppe Gold. Aneel, it's good to be speaking with you again.
Thanks, Adam, and thanks for having me again.
Yeah, you're welcome. So last time we spoke, it was in spring of this year, and the news flow was really good despite the pandemic restrictions in various areas. And you basically doubled the resource to something like 2.5 million ounces since buying the mine in 2017. Great progress. What's the latest update from your side?
Sure. Yeah, thank you. Yeah, that is great progress. Having a base now only down to about 400 meters of drilling. So, at depth extensions can still exist here on this project, as well as, stepping out from the four deposits we have, which are the ATO 1, 2, and 4 and the Mungu Deposit. So 2.45 million ounces is a great base that allows us now to move to our phase two. So from the oxide mine, which is from surface down to 40 meters or so, we can now transition into the fresh ores over the next couple of years. And that's the feasibility study we've been working on over the last, 18 months now. It's a revised feasibility study from the work that Centerra had already completed to get this fully permitted for the heap leach, which is our phase one, and the CIL plant or CIP plant, as well as flotation plants, and a tailings facility. So all that heavy lifting has been done. We took a phased approach. So about just a few weeks ago, actually 3 or 4 weeks ago now, we released the feasibility study on that phase two. So after releasing the resource update, we converted about 1.6 million ounces into the reserves, give or take. And we've now added 10 and a half years of mine life at approximately 100,000 ounces of gold equivalent run rate. So today, going forward from, late Q1 2022, we have 12 and a half years of mine life. 2 of those will be the oxide mine, remaining oxide mine. So we'll produce about 100,000 ounces at about $650 all in cost. And after that will be the phase two, which will come online, barring no delays. Obviously, we're still in the supply chain COVID issues globally, not just for Mongolia. By the end of 2023, that phase two should come online. And so we announced the headline numbers. IRRs are in the 67% IRRs. Payback is 3 years, less than 3 years. It's actually 1 year if you take just the first year of cash flow from phase two. But we have the advantage of having a producing asset while we're expanding. CapEx came in at 128 million US. All in costs about $853 US. So there's a lot of room now for optimization while constructing. So this is a project we announced with headline numbers that are robust, and that is now moving forward. So that's a major milestone catalyst for the company by adding 10 plus years of mine life on a permitted project. And it's expansion. It's not a new build. So that expansion is underway. So today we are installing the crusher. 1,000 ton per day crushing circuit, fixed crushing circuit that will be used for phase two, but we'll have the luxury of using it in phase one to potentially mine, crush, and stack additional oxide ores, which could relate to more cash flow in the next 2 years. So, growing our cash flow position in the next 2 years while building this phase two. So that's underway. So this is a real feasibility study that's expanding. And there's not a lot of companies that will announce a feasibility study and really start that expansion immediately. That's the difference with us. So 2 weeks after that announcement of the feasibility study, so just about 2 weeks ago now, we released a 65 million US financing package, debt financing package. So it's a landmark package that's come all from within Mongolia. So that's also a big deal coming so fast. Again, most people don't announce a feasibility study and then announce a majority of that capital required for that expansion or new build already lined up. So that, again, in even with COVID delays, we were able to continue to move that financing discussion forward. And now we have access to this additional capital that allows us to continue to expand in phase 2 over the winter. Long lead items can be ordered, deposits can be put down. We can continue with camp expansion. The crushing circuit will be fully operational, we think, by end of Q1. So call it March, April in the new year. And as I was mentioning earlier, we have some optimization opportunities, which is adding more ounces to the mine plan. So the Mungu deposit, only 1 million tons, were included in this mine plan. So you have 8 million tons that can be converted over time. Any additional drilling, from extensional drilling to new discoveries, or converting more of the resources into reserves over the next 2 years will help optimize both on the cost or life of mine, as well as potentially the production profile, where our initial target was 125 to 150,000 ounces on a gold equivalent basis of production. We think that 100,000 ounces will increase by the time we bring that phase 2 online in just over 2 years. So, I mean, those are the biggest updates. I guess to note as well in optimization, the $853 all-in cost could go down by $100 US. So we could be looking closer to 750 all-in costs for the phase 2 if we connect to grid power. So we should have a solution to that, and a definitive solution that we can announce to the market, hopefully in the coming quarters, which will immediately decrease our OPEX in phase 2 by about 10 million US or $100 an ounce per year. So that's pretty significant optimization just on the power solution, let alone what I mentioned before.
Certainly, yeah, and that comes from you mentioned a lot there, and it's great, the progress. So I just wanted to pick apart a couple of things, because maybe it pertains to what you found in the feasibility study on the CapEx side. You mentioned how have costs been? There's been a bit of cost creep, in the industry, inflation globally, obviously for everyone. But how are you rectifying that? What did the feasibility study show? And this power grid sounds like a really innovative way to continue to bring the costs down on the project.
Absolutely. Yeah. So I think where you see the costs creep up, or, steelworks, obviously, when you put together these studies, they can be done at all-time highs when you're using the spot pricing of steel. As earlier this year, obviously we saw that with steel. So I think there's some of that crept up into the capex here. Again, will it be real or not by the time we bring it online over the next 2 years? We're not sure. It all depends on what that commodity's price as we're procuring it and installing it. But a majority of our costs are still local. And so they haven't actually crept up as much as expected, given you have the local talent in country for the earthworks to, the concrete foundation, to the installations, the building of the plants, all that is done locally. The equipment is coming from China. But we have that logistical and cost advantage, given that we're 150 kilometers from the Chinese border. So, versus a lot of places in the world. So the biggest CapEx, I guess, driver was the plants. These flotation plants will come from China, installed in Mongolia. So, that's probably where you saw the biggest creep in terms of the equipment side.
Certainly. Okay, great. Well, look, let's talk about the landmark financing. This 65 million is great news. Can you delve into a little bit more detail about how that's structured? You said it's all from Mongolia.
Yeah, absolutely. So I think it shows landmark because, just under 2 years ago, we announced a landmark investment from the Mongolian Sovereign Fund. Their first ever investment in any mining company was into Steppe Gold. So that was a big vote of confidence for our team, showing you that we do things properly. And, as in any jurisdiction, you should be as local as possible. We certainly are. We're considered a Mongolian company listed on the Toronto Stock Exchange. So our CEO is Mongolian, half our board are Mongolian, and most importantly, 99% of our staff in country. So that has allowed us to operate during COVID, because if you relied on expats, then we wouldn't be in business today, because you couldn't get in, obviously. So, highlighting the skill set that exists already in Mongolia was very important. So the 65 million US package came in 60 million US of debt on a 3-year term at a 9% interest rate. And, there's no prepayment penalties. So this is something that we can refinance and optimize again in terms of cost of capital. And that was always a plan. We announced to the market that we would raise capital within Mongolia. This capital allows us to continue to progress without waiting for the international syndicate of debt providers that, would take a lot longer. Post feasibility numbers that you need to, 6 to 9 months probably to finance. So this capital sponsored by the Bank of Mongolia. It was, their intention is through the Gold 2 program, which we were one of the first companies to sign that in 2017, is to help grow gold production from primary sources, and we're one of the leading companies to do so. So this 60 million US debt is a great starting, tranche of capital that allows us to continue to build our phase 2 without any delays. And the goal is in the new year, probably by summer, we'll refinance this, or, so we'll increase the 60 million to probably closer to 85, 90 million, which is the debt component based on the 128 million US capex. But because we're in production, we'll have a strong balance sheet, and there's interest from international banks. We'll most probably lower that cost of capital from 9% and maybe refinance it out to hopefully 5 or 6%. Ideally, I mean that would be the ideal scenario. Of course, I have no idea until we move to the definitive with the new lenders. But we're not going to be needing to use the full 60 million US. So there's probably about 20 million US of capex requirements over the next 6 to 9 months with deposits and expansions. And then we'll refinance it out, bring in an international syndicate. And of course, the domestic banks in Mongolia will be welcome to join or participate as syndicate partners. So it was a great way to get capital immediately, to aggressively, to continue the expansion of this company. Without waiting for the international syndicate. And we have the opportunity now to optimize that financing package. But, having a 3-year term with no prepayment allows us, very quickly to refinance this out. And then we added another 5 million US on a gold sale. So a prepay on a gold sale, also with the domestic bank, TDB bank as well. And that allows us to build our working capital position, strengthen it through the winter, because currently we are, as the market knows, we're impacted by COVID in terms of procurement of key supplies and reagents for the oxide production. So we have deferred or pushed forward production from the oxides for the last 2 quarters now, and we've signaled to the market that we're not going to restart production until the end of Q1 2022. So without being in production, having a cash flow for the next 3-4 months now, that 5 million US has allowed us to monetize our inventory that's sitting there on the pad. So today we have just under 2 million tons of unprocessed ore sitting on cell number 3. And on the ROM pad, that's about 45,000 ounces on a recovered basis. So that's a significant amount of money, probably 40 million US of net cash to Steppe Gold sitting there that we know we can get to. Because if you remember, when we brought production online and right out of the gate in April 2020, our first quarter was, came in low 700s all in costs. We produced 15,000 ounces that quarter during startup, ramp up, and COVID. So we've never had any issues to recover gold or get to, generate cash flow from the oxide mine. So we just monetize that inventory sitting there so that we can get through the winter without any potential dilution or perception that there's a requirement to raise equity, especially at these levels. That's just not our thing. We're owners of this company, just like all our other investors and partners.
Very good. Excellent. Okay. So you mentioned about the Mungu discovery and briefly, but could you expand on the sort of update of the exploration work that's going on there? And then also your other projects, if there's
absolutely. Yes, sure, Adam. So the Mungu discovery is a brand new discovery. We put a maiden resource on it earlier this year. So about 424,000 ounces were added to our resource book this year from the Mungu discovery, without a lot of converted into the mine plan or even reserves today. And, a lot has to do with obviously COVID. So, getting our additional samples out of ATO to Canada during COVID, there was a 3 to 6 month delay between 3 months, no planes leaving the country to then the labs being backed up. So Mungu was not being able, we weren't able to bring in Mungu to do that work by now. So, they would have delayed the feasibility study. So it's a nice add-on that we can convert, and we can still drill out. It's still open at depth. Only been drilled to about 400 meters vertical depth, and it's still open at depth, and still the gap between ATO 4 and Mungu exists. So that's a very exciting project that, we'll roll in at some point. And that also has to do with our capex that we put out in our recoveries. We're about 80% recoveries just producing concentrates. So without building a CIP or CIL plant, we've pushed that out, allowed us to still have high recoveries, and then you can defer those recoveries if it makes sense, which it should, to then add a CIP or CIL plant. And Mungu is mainly precious metals, so you will most probably require a CIP or CIL plant anyways to get to the 90% plus recoveries that we expect if we toss that in. So Mungu is very exciting. ATO 4, we doubled the size of that when we took over the project. So we've had success extending at depth and towards Mungu. All of these 4 deposits are open below 300 meters. So there's an opportunity for new discoveries or growth on all 4 of those deposits, including Mungu, as well as stepping out along the trend north of Mungu in ATO 4, which we'll get to in the new year. So in the last few months, we did, I think, drill just over 3,000 meters. That was focused on some additional drilling around these deposits, but also stepping out from the property for the first time ever. So that could be very exciting if those results yield some new mineralization opportunities 1, 2, or 5 kilometers from these deposits. That could become, add-on satellite deposits and discoveries. So lot more to follow in the new year. I think we budgeted about 10,000 meters in the new year for the ATO and Mungu mining license, with the ability to double that to 20,000 meters. So in April, when we start exploration, we'll have targets identified, and we'll get to push that forward. So that's a nice to have while you're building, have the ability to continue to extend both the mine life and maybe even the production profile from the ATO mining license. And then, of course, the very exciting UK project yet to be drilled. That's in the southwest of the country. The Uudam Khundii project is a project that we've been, dying to get to drill. We've never drilled it. Nobody's ever drilled. But Erdene Resources has had some amazing success surrounding us. So they had the licenses adjoining to the north and the south, and we're in the middle. So they've done a great job down there with new discoveries, over 1 million ounces, I believe, in their books as well. And they have a mining license. And put out a feasibility study on the license to the south of us. So that's an area that's highly prospective, clearly, that we have yet to drill. So we've only completed trenching and have 4 discoveries that are drill ready. We missed the window for this year, so we're hoping in April again, when we start production, we'll have another 10,000 meters budgeted for that project. Again, the ability to mobilize more drill rigs upon success, and so you can expand the corporate 20,000 meter budget to 40,000 meters if it made sense on both properties and which is success. So that's a lot that's going on, clearly. So 2022 is a pretty action-packed year for us, with production coming back online, a significant amount of cash flow that will strengthen the balance sheet, construction continuing on phase 2, the refinancing or increasing of the debt piece for phase 2, and then any exploration, success and sizzle from both properties. And I think one of the things to note is, there is obviously an equity component to this financing package. 128 million US capex is not going to be funded all from debt. So about 70% of that is our debt, and 30% would be contributed equity. So ideally from our cash flow. And the cash flow for the next 2 years on what we have today in the oxide mine life, just currently without any updates, is about 50 million US plus. So I mean, 50 to 60 million probably US plus on a conservative basis, not relying on a higher gold price. So if you do the rough math, 30% of 130 million, that's 40 million US of equity. Well, you have the ability to self-fund. That would be our ideal situation. And now that we don't need to raise equity immediately, we can certainly build up that cash to do so.
Yeah. Excellent. This is a very strong position to be closing out the year on, and really, really great to hear the progress and updates. It looks like you've got quite a lot on your plate still for 2022. So thanks for sharing the update, and hopefully we can catch up in 2022 to inform investors of the progress with this.
Absolutely. and I look forward to providing those updates. Thanks again for having me, Adam.
Yeah, thanks, Aneel. Thanks for talking with Assay TV.
Thank you.